My name is Mark Kohler, CPA and attorney, and I'm here to give you the lowdown, the easy to understand changes in the IRS deadlines so you can make some decisions. And I'm going to throw in a few bonus tips here. And I want to get right to it. Well, it's been a crazy year, right? This COVID impact continues to beset us with IRS notices, government legislation, and SBA notices. So let me do my best to bring you up to speed. Might as well start out with the PPP. Payroll Protection Program. Any of you that still think you might qualify and you didn't get it the first round, you have until May 31st to apply. It was changed from March 31st to May 31st, so you got more time. Now, you may think, well, I've already been through this. I don't need to know this. Here's my first tip. I was literally with a client in my office last week. They were in on a totally separate matter. They were selling some property. They had a Schedule C income, no employees. And I said, did you get your PPP app in? And he goes, well, we never qualified. And I go, what do you mean you didn't qualify? And I was like, it looked pretty clear to me. And he goes, well, our accountant told us we never qualified before, so we didn't even apply for round one. So I ran the numbers. We called their banker in the meeting. They had 17 grand and change waiting for them. I think they've already gotten their check. This was 3 days ago. And they went straight down to the bank, did their application, done. People, get a second or third opinion. And I've got articles and videos on the PPP program so you can see if you qualify. But the important note is you have until May 31st. Get on it. Next, we've got the IRS Notice 2021-21. There's a tongue twister for you. And here's the changes. 1040s, you've already heard this one. 1040s are not due April 15th, now due May 17th. Because of the weekend, it hits on May 17th. Now, an important note, a lot of people don't realize, you don't have to file an extension. You just have till May 17th as if it was April 15th. If you do file an extension by May 17th, you have until October 15th to file. And remember, there's no penalty between now and May 17th, no interest on anything you might owe that you should have paid by April 15th. You're not going to get an extra month there of problems. So you've got this extension for 1 month till May 17th. If you need more time to file, it's okay. You can file an extension on May 17th. 60% of our clients do or more, and it actually reduces your chances of an audit, gives you more time to prepare. I've got some video links down below and articles on that topic. Now, here's the big one that just came out in the last 24 hours. The IRS says we now have until May 17th to do IRA contributions for 2020, Roth contributions for 2020, Coverdell or ESA, Education Savings Account contributions, Archer Medical Savings Account contributions, and Health Savings Account contributions. All for 2020, you have until May 17th to make a contribution and get a tax write-off, potentially, depending on your situation. So we bought ourselves some time. That was the big unknown when they first changed the 1040 to May 17th. It was all of these contributions. Now, if you're making a contribution to a SEP or a solo 401k and you file an extension on May 17th, you're going to have the additional time you normally would. And they even indicated for those that would normally make a SEP contribution by April 15th, you have until May 17th. Now, I also want to give you 5 tips. Got them right here. Number 1, a Roth IRA for your kids for 2020. Some of you say, well, I didn't pay my kid last year out of my small business. He or she didn't have any income. We can't contribute to a Roth last year. However, I was just on a phone call with a client today out of Massachusetts, 16-year-old daughter doing babysitting. Last year, she probably made anywhere between $1,000 to $2,000. She's not required to file a tax return until she makes $12,500. Let me see, I want to make sure for last year, $12,400 last year. She made a lot less than that, but she can still contribute to a Roth before May 17th for last year. And father and daughter could start a self-directed IRA, combine IRAs into an LLC, go do some investing. She could even form a crypto Roth IRA and start buying some cryptocurrency with $1,000 to $2,000. Who knows where that'd go? Second tip, the Coverdell or educational IRA. I was on a phone call today with some clients out of Utah. They were like, we've never even heard of the Coverdell. What is this? It's like a Roth IRA for college, but you can pull out any earnings tax-free, penalty-free, between the kid's age and when they turn 30 for any valid college expense. Lots to learn there. I've got some articles on that and other videos. Huge. Now, the parents were like, well, we make too much money as well. We can't do it. Grandparents can open the account for their kids and make them the responsible individual for changes in the beneficiary designations. Because if one kid turns 30 and didn't use their money, you can roll it to another kid or a grandkid. So a covered out ESA is wonderful. You don't get a tax write-off, and you can put $2,000 in for last year up until May 17th per kid. And then do your contributions for 2021 as well. Third tip. I've been with clients before. I can't remember the last phone call on this one. It wasn't today or yesterday. But I have spouses say, well, I don't have a job, so I can't contribute to Roth IRA because I don't make earned income. IRS says, stay-at-home dad, stay-at-home mom, the income of the working spouse is attributed to them for purposes of contributing to a Roth IRA or a traditional IRA. So man or woman, you're staying home, taking care of the home front, you can still contribute to a Roth or traditional for 2020, even if your spouse has a day job, even if they participate in a plan, and even if you didn't have earned income. So look into that as a spouse with no income. Next, I love this one. A lot of people think, I had a phone call like this last week. Client goes, well, I have a 401k at work, so I can't do a Roth IRA. You can do both. Oh, yes, you can. Don't believe that. So you can have a 401k at work, max it out, and still do a Roth IRA by what's called the backdoor method. Now, again, 401k at work, max it out, and then learn the backdoor Roth IRA so you can still contribute to a Roth. Which brings me to number 5. High income earners can also still have a Roth IRA. And you go, well, I make too much money to contribute. You go through the back door as well. You make a non-deductible traditional contribution and convert to Roth. There's no limit on how much you can convert and your income limit on when you can convert. Now, if you have traditional IRA money already, we got to convert that to a Roth or roll it into a 401k so it's off the table. Again, I've got videos and articles on that. So what I'm hoping here, in summary, is that you know the deadlines, they've been extended, and if I've said anything that kind of gets your juices flowing going, oh my gosh, I could do some of that. I never even knew that was an option for me. Do a little research. Watch a few vids of mine, read a few blog articles, catch our podcast every week. We have a ton of free content out there from our law firm and accounting firm and trust company, Directed IRA. So please, get involved. You're the captain of your ship. If you don't think you're getting the right answer, shop around and get a second or third opinion. Hang in there. We're going to get back to normal soon and keep living your American dream.